What up, what up, what up?
What's
It's
going
Ferris
on,
and
buddy?
Ben, Disrupt Equity.
The Disrupt TV studios.
If you see, it's the Money Monday show. How you doing,
We'll put
man?
the graphic up later. Don't worry about that.
Yeah.
No, doing good, man.
It's a Monday, man. It's definitely a Monday, right?
Got my third cup of coffee.
Yeah, it's been a busy meeting-filled day, to say the least. But a lot of exciting stuff going on in our world. So some things we'll probably announce over the next couple of weeks, couple of months, and kind of see, what else we have to share.
And we will be doing this live. Facebook was having some glitches the last couple of weeks while we were doing this.
Yeah, and it's going to look live to the people that are watching it.
Yeah, no.
But for those of you that want to comment, usually we love commenting. We usually want people to call in as well. We're going to have that phone number set up in the near future. But Facebook was having some glitches, so we had to just record it and upload it. But welcome to Money Mondays, people.
Yeah, we're talking everything investing, not necessarily just multifamily, not just real estate. We're going to try to open this up to just a little bit of a broader market for any investors.
Absolutely. And save all your questions for the next show as well.
Yeah.
We definitely will go through and answer all the live questions that we get and, share any information that we can. And honestly, we want to start to probably get this figured out to start to bring on some other experts as well. So we'll definitely figure that out here in the near future.
Yeah, we'll almost do like an interview, right? Either in person once it's socially distancing acceptable, right?
Yeah, I made sure Ben was 6 feet away. We got the measuring stick out and keeps on like to get closer to me. And I'm like, Ben, come on, give me my space. But we're doing good.
No. So what are we talking about today, my friend?
Today we're going to talk about acquisitions and operations, the meat of syndication, I'd say.
Right? All right. So our multifamily viewers, right? So today is gonna be apartment complexes, and kind of what we're seeing in the market in terms of buying them, as well as what we're seeing in operating them. Yeah. So what are you seeing from the brokers, man?
Brokers, mixed bag. I think from every broker I've spoken to, definitely acquisitions have dried up. Yep. One broker was telling me 90% of the deals that they had in the pipeline blew up, and of the remaining 10%, 90% of those are unrealistic sellers, and so you basically have whatever that math is, 90 times 1.9 is completely out of the way, and you have a very small amount. I think it's 0.9% of deals actually still going. That was kind of obviously just an exaggerated
we're friends with a lot of
the
brokers that we deal with. You feel bad, right? Because obviously these are sales guys and gals, and they're trying to still make a living, and the market is essentially tightened up to a point where the very, very few deals are going to get all the way to the finish line because, right, not only is the financing piece kind of drying up or changing, but you got investors that are scared.
Yeah,
right?
and the other thing too is just that all the deals that are going on pretty much have been retraded. Yeah. The only one deal, I was kind of talking to a broker, and he was kind of telling me that basically they had the 70s, 80s constructions are deals where they are seeing 5-10% discounts, right? $1, $2, $3 million, depending on the price point. Discounts. The newer stuff, they only saw very nominal discounts, and so one was in I don't want to say the name because I don't want people to know who the broker was because I don't want to share information that they wouldn't want me to share. But it was in a very popular metro, and it was a new, almost I think it was a brand new build or almost a brand new build. And in that deal, he said there was very, very small concession, like 1%.
Yeah.
And so I think the big equity groups out there, they're just buying. Again, those guys have 5-10 year horizons.
Yeah, they got
a lot of these short term deals. They are looking for the discounts, and ourselves included. Right, we're looking to buy deals that have a good pricing, discount, kind of relative to where they might have been before.
Yeah, things have fundamentally changed, right? So I think you have to be realistic, especially when you're talking about Class C and B stuff that we felt was already trading at a premium pre-COVID. Now during COVID,
it's a buying spree, man. You prep your investors and get ready to find the good deals. And so we are still talking to brokers. We actually submitted an LOI last week, so we'll still buy if it's the right deal. But the deal we submitted on, I think that deal, we're at 20%, almost 15% less than where it traded at, or they were initially asking pre-COVID. So, we're looking for deals that
it's about 20
are heavy value adds and have a good pricing incentive to make it work. So
have a good story, right? I think that's what it's all about, right? Regardless of where you're at in the cycle, can you execute on that business plan and get out successfully, right?
Yeah.
So what types of deals are we steering clear of, though?
Man, I like my multifamily. I think multifamily is going to come out of this very strong. I think obviously retail is getting hurt. That people realize that the Chick-fil-A, but that Chili's or Cheesecake Factory, that was trading at a nice premium of maybe a 4 or 5 cap does not need to be opened.
Yes.
Chick-fil-A did not pay their their rent to any of their properties last month. So, I don't know if you saw that, but
I did not see that.
Yeah, sorry, did I say Chick-fil-A? I meant to say Cheesecake Factory. Sorry.
Oh well, yeah,
they both start with C.
I did hear that.
No, Ben would have been disappointed. He likes his Chick-fil-A.
Hey, I've got, I should have
Cheesecake Factory did not pay the rent. Yeah, and so but people realize that in the end of the day, people need to live somewhere, and the government is very motivated to make sure people can continue to live somewhere.
Yeah, affordable housing, right? That's where me and Ferris live. The 70s, 80s,
and I think
workforce housing market.
I think all multifamily will come out of this strong, right? Yeah. You're not on a rocket ship like you were before, but in terms of relative to other asset classes, multifamily, I think cap rates are going to look good, right, compared to everything else, and so I think multifamily is where it's at, and whether it's A, B, and C, I think there's pros and cons of each. Honestly, I don't know if one is better than the other. Right, because right now we're in like a weird funk. We're not really in a recession because because pricing has dropped off. Right, but really it's more of a forced recession. And so you still have the A-class people that still are able to work their jobs remotely and still getting paid.
So
they're still paying rents. And so
I almost kind of look at it like you're kind of just getting slammed back with a rubber band, right? And then like once we open up, it's just gonna be like a rocket ship, right?
We'll see what
Could be, right?
there.
Nobody really knows. I think you're right. It was a forced recession, or people could call it a depression, right? Yeah. It's just how long is that going to last, and what's the ripple effect after that, right? So, where are you thinking? Do you think cap rates? Is that are those going to expand? Are those going to compress?
I think in general, across the board, you're going to see cap rates expand. But then I think once that solidifies a little bit, right? I do expect multifamily to compress, right? From it's going to expand and maybe compress back to where we are, or maybe even do better. Who knows, right? There is still a lot of cash out there. Right, there's still a ton of cash out there with these bigger groups. They're all just on the sideline waiting to see, wait for things to stabilize and normalize. So that cash will come back into the market, and what's going to look attractive.
So you got a ton of equity, and what people are also talking about is debt is still cheap. Yes, you had a collapse earlier in the year, and interest rates are still, you're buying deals if you can get it across the finish line at 3 to 3.5.
Yeah.
Which 12, 18 months ago we were underwriting deals at 5, 5.5.
But the caveat is right now you have all of basically there's just a lot of requirements around reserves that they make you have. So that does, for anyone buying a deal, be aware of that. They did require 18 months of P&L, basically your debt payments plus your insurance and your taxes.
Yeah, all your escrows.
Now they changed that down to 12 months, and so before it was 0. And so, it's kind of interesting to see what happens in that, because that will impact your proceeds. But if you're buying, you're looking to buy 60, 65% leverage anyways, it's not a problem.
Yeah, yeah. So let's talk about operations, man, during this pandemic, right? Obviously, acquisitions has changed, operations has changed, and obviously the change had to happen pretty quick, right? So, how are the properties doing?
You tell me, man. They're doing good. They're rocking. They're doing fine. I guess, not all properties are doing fantastic, right? Talking to other friends, people that we know, definitely some people are struggling. I think we've been very proactive in getting, we're definitely not at where we were pre-COVID. But, in some properties we're doing actually very close to that. In some properties, maybe there's still a little bit of a gap. But overall, I think it's been going better than we expected.
Yes.
And there's still work to be done to kind of get through this phase, right? Through this downturn on the properties that still need it, and kind of get them back where they are. So overall, it's going better than expected. I know we have some charts that we'll share kind of
Absolutely.
here shortly.
We'll get into some numbers here, which is.
But maybe let's go ahead and go to that slide. Actually, it's kind of here you kind of see some examples, right? These are just some different properties. You can see where they're trending relative to the same point in time in March, in March, and as well as kind of what May is looking like. So most of these properties, May is actually doing very well.
That was a surprising thing. I think both me and you thought we could get into April because there's a lot of people that worked up until probably the beginning of April, so they therefore had April rent, right? So we knew April was going to be, and it ended up being about 5 to 10% less, right, across the board. May was actually a surprising thing because I think both me and you. We think
leave it on this.
We thought that May was going to be really tight, and I think those stimulus checks, and I think some of this rental assistance stuff that the government is trying to roll out, PPP, getting people back to work and getting people employed, at least getting people a paycheck, even if they don't have much to come back to, has really helped May, and I'm hopeful that June will also get a little bit of a boost because of the same thing, right? July, once again, then becomes the wild card.
Yeah.
right?
We'll see. That was, you mean June or June, July? Yeah.
June. I'm hopeful that we can kind of ride that wave a little bit.
I'm almost want to bet money we're going to have better collections in May than we did in April. Even though I thought it'd be worse.
I think you actually might be right, man. Right?
People that also didn't pay in April are going to pay in May. So
a lot of people are still waiting on their stimulus checks, man. I don't know. For our viewers, if you qualify for one or if you've gotten one, we've certainly heard the story from our residents that they haven't gotten it, and I've heard some from personally from some friends that they haven't gotten it either. So I think that's actually true. But I think that could boost. Maybe get people caught up from maybe April rent and May rent. Or they could be paying June early. Who knows, right?
Yeah, and if we go back to the chart again really quick, if you take a look at even really the top right and the middle right, just look at the spread between May and now. I mean, it's doing better than in March too, which was the best. There's just a handful of properties, right? But it's really, March was a great month in all these properties. Yeah. And to see May just outperform that far, I mean, we were definitely surprised so far. Yeah. Right, but then you have a laggard, right? Like if you look at the bottom, the bottom left, there's still a little bit of a gap, right? Closing that delinquency gap. And those are deals that we were still having to cycle through the tenant base, so we kind of knew that. Yeah,
not all of it is COVID related, right? As a lot of our viewers are going to know, right? We go through a big reposition. We get some of the old tenants out, new tenants in, raise rents, do our rehab. All that kind of is still happening, right? So you're going to have a little bit of disruption there, and then you just throw COVID on there, and sometimes that's tough. But so what are some of the tips that your property management team is doing to effectively operate right now?
I think just having a plan and execute, right? Really work down your delinquency, understand where every tenant is at, and work with those tenants, right? Right now you can't evict even if you want to, and so it's kind of short-sighted to take an aggressive approach. And instead, we're talking to tenants and seeing, hey, did you lose your job? Oh, you did. Okay. That's unfortunate. Well, hey, let's walk through, if we do ask for proof, but then figure out how can you create a win-win situation, right? Yep. Whether that's, obviously not paying rent the next 2 months and then you put that on the back end of the lease or spread it out across the remainder, right? Helping them find assistance. I mean, one thing a lot of people don't realize, they get stimulus checks, right? So telling them, and we put together a bunch of resources to show tenants all the different things that are available out there and help and educate them. So
I think it's all about being proactive. Communicate, right, is huge. Yeah.
And I think
that those are the most important things.
That's the delinquency side. Then I would say on the operation side is just understanding, what's the policy with the office? What's the policy with touring? How do you keep the doors open? I mean, we've actually been surprised. We're actually seeing good leasing. Yeah. And this came up on a different panel that I was on last week, and Anna Myers, who those with Grow Capita, she made a very good point, which is you have a lot of couples that are basically stuck at home together, right? We saw what happened in China with divorce rates increasing. Well, maybe that's all part of it.
Did that really happen?
Yeah. Wow. And maybe part of the leasing is people just getting fed up, and whether it's spouses getting in arguments, or a brother-in-law that lives with them, whatever it is, but people leaving to go find their own space, or maybe they need another room and they're going to make an office. So that was an interesting theory that I had not thought about, but maybe that actually is applicable to why we're seeing the leasing. Because at first I thought it was that maybe because we're open and no one else is, or most people aren't, but that's not true either. Most properties are open.
Full disclosure though, we're being safe, right?
Absolutely.
It's open in the sense of our staff comes in, but they're safe inside. And people can still call and they can stop by and hand things through, obviously a Dropbox and stuff. But I would say I'll take the contrarian approach to that. I'd say people might be losing their jobs though too, right?
Why would people be leasing?
Well, maybe they lose their jobs. I don't know, man. They have to move to another part of town to get another job. I don't know.
I don't like that.
I mean, I'd say that's just as likely as people getting divorced and moving out of their apartment too, right?
Oh, I guess the problem, I'd say moving costs money, right? And right now I don't think people are, you would see that in one part of a town, not the other, right? But I think across the board, you're still seeing a good leasing amount. And so,
I'm seeing a lot more in Atlanta. Atlanta has been surprising
too. It's a question about why, right? So you feel like there's just something general that's not region specific that's just causing it, right?
Possibly.
Maybe it's people have money and they're like, hey, I'm going to be on unemployment for the next year and I'm going to go get my own place. Who knows, right?
That's the other thing that we didn't talk about. Unemployment is blowing the roof off a lot of people's incomes these days too.
It could be actually the son that lives with the parents, but now the son's home all day. Originally he was at work all day, so they never saw him. He'd just sleep there and leave, but now he's home all day. Wants his own place, right? So it could be a lot of those
parents
kind of scenarios.
Want him to have his own place too, probably.
Yeah. So,
but the unemployment, right? You're getting at $600 on top of the unemployment amount that you're getting. I mean, for a lot of folks, that's a lot of money. That's probably more money than they're even making on a weekly basis. So I think that could also be attributing to why we're seeing a boost in May, because some of those unemployment benefits are going to start kicking in. So. What else are we talking about today, man? What else is happening in the market?
What else
Anything
is going
exciting?
on? Nothing exciting that I've seen. It's the stock market run that we're seeing is kind of weird. I'll say that.
I feel like it's a dead cat bounce, right? Where it kind of boom, it bounces, and then it comes back down, right?
How many cats have you seen?
It's a technical stock trading term,
no,
right? You guys can look it up, right?
No, I know the term. I'm just messing with you.
No, so but I think that it's obviously artificial. I think there's a lot of hope that we're going to see, but I think that we're going to have a little bit more pain, and then hopeful that in third and fourth quarter we start seeing an uptick. But I think really we're talking 2021 at this point. There might be some opportunities.
We are gearing up to probably be able to pick up a property or 2 or 3 in the fall.
Yeah, in the fall.
So if anyone has a good property out there, let us know. We're happy to take a look.
Yeah.
But TBD, right? I think right now it's just been operationally about just doubling down, right? Build up cash reserves, and kind of what's the word they use? Fill up the coffers, right? And kind of plan for figuring out what else to do, right? And so, how do you double down on what we have and then figure out other opportunities to continue to expand?
And I think opportunities is the one word that I wanted to kind of expand on too, right? We'll have some announcements in the coming weeks, but I think it has forced us to really take a laser focus on our current assets, right? But also kind of explore other opportunities. I think people, they need to realize that syndication is just one thing, right? There's all these ancillary businesses, and there's opportunities to make yourself more efficient, more vertically integrated, and that's what has kind of freed us up to do some of those things.
And actually, speaking on the same point, on the same panel that I was on, one good point that came up was around right now. What also the other opportunities are going to happen. Right, there's going to be a lot of businesses that have to close their doors. Right, they don't have the cash, they don't have the ability to stay resilient, and so really there's opportunities in that about how do you maybe pick up some of these businesses and find the ones that there's a good chance there to really maybe glom them together and kind of grow something more interesting. So we're definitely we're disrupt equity, we're not disrupt real estate, but we're multifamily is our bread and butter, and definitely looking at what else is kind of a good fit for us.
We're excited. So I guess check us out next Monday.
Wrap it up, Ben. Wrap it up.
And we're happy to answer your questions.
Next week we'll bring it. Definitely come with your questions. Ask it. Hopefully we'll have this fixed and we can kind of go live stream straight up. And I'll be out here on this laptop answering questions and making Ben talk more because he doesn't like to talk very much apparently. But we'll definitely do that.
This time.
Yeah, Ben is a little bit more reserved than usual. It's that live streaming aspect that gets him excited. So we'll get that going next time. Maybe we'll get the phone calling going next time or the time after.
That'd be cool.
I've looked into that, and definitely thank you guys for hopping on. So see you guys again soon.